right, another episode of A Podcast. Your host, Stephen Maxton, and today we have the very amazing energy of Peter Paley, and he is a mortgage professional. I was going to say specialist, probably both. We could classify you as many things in the area, do many things mortgage in your world, and it's great to have you on here. I'm excited to talk about this part of the industry. We've had a couple folks in the real estate space come on the podcast and talk more, but I think it's really important to talk the numbers. I see a lot of your content going out there, and like I said, excited to chat more today and hear more about things from your side of the desk, truly. And so, Peter, why don't you give a little headline news about yourself and your story to kick things off here for the listener?
Sure. Thanks for having me today, Steve. My name's Peter Paley. I'm a mortgage professional in Winnipeg, Manitoba. I've been in the industry. This is my 28th year of being in financial services. I've been in the mortgage broker space since 2012. And recently in 2022, me and my two business partners, Colton and Dark, started our own franchise of Dominion Lending Centers, Mainstream Mortgages, and we've been killing it ever since. We're up to 30 mortgage professionals in our office, and we're set to probably do $150 million to $200 million of volume this year. And we couldn't do it without the support of people like you and all of the great realtors and industry partners that we have. So really great to be here.
Awesome. Peter, that's just like so impressive to me too, because from parts of like, my world, and have some experience in the real estate space, as you know, but it's so interesting to me because I don't think everyone knows about mortgage specialists and lending in different ways. They're normally kind of like go to a bank and go through the motion, but there's no real competition and urgency in there. And I recently had a conversation too with a friend that for the first time ever had reached out to someone kind of more in your space. I don't believe it was you specifically, but they had a huge advantage on their mortgage because of it. So not to say that it will necessarily always, lead that way, no misled promise, so to say that way, but it was very interesting on the speed of the business. And there was more urgency when he looked outside of his traditional banking system that way. And anyways, that's my recent example. But what do you guys see on your end of the desk there, and why do folks return and come back for the services? What are the advantages of doing that?
Well, I really think a lot of people don't even really understand what a mortgage broker does. And what we do is we really work for the client, not the institution. So we have a lot more options, rates, terms, and we can maybe tailor the mortgage or set you up for a better financial situation in the future. So for example, a side effect of coming to a mortgage broker is you almost always get the best rate and the best terms. And you have someone who's looking out for your best interests all the time. I don't have to worry about the shareholders of the company. I don't have to worry about getting home at 5 o'clock to my family. I can kind of work wherever I am. I can field your calls most of the time. I'll usually answer on the weekends, holidays, evenings. I'm there for you, and my whole team's there for you. One of our biggest compliments, if you look on any of our reviews, is how fast we respond. And that's just because we work in a team environment. And we're not limited to just purchases. We can help you with your renewal, your refinance, your commercial property, your cottage, your vacation home. You want to buy an apartment building? We're there for you. We can do almost any kind of transaction in real estate, in mortgages, and we're going to be there looking out for your best interest.
Awesome. I think that's a great recap. I actually didn't know that you worked in that many different sectors within that. So I think that's great to hear that it's like a laundry list of things. It's not just houses or cabins in that space. Those are the first two things that always pop into my mind when I think mortgages, right? And what folks are doing, but investment properties, you mentioned in terms of apartment buildings. That's great to know. What are, I guess we'll talk in like more current day. I think it's become more top of mind with folks coming up in the next, couple years up for renewal, and just reminding folks that it's important to get maybe that second opinion ultimately in the space. And how important in terms of like, how much have you seen folks in terms of like their savings on different things? Like how big of a decision is that really been a positive impact for some of the folks that you've worked with, or numbers that you've seen over the years, as vague as we can keep it with, within the rules of what you're allowed to share
Yeah,
on the
for sure.
episode. But
So the next 2 to 3 years are going to be the largest renewal mortgage years in Canadian history. So everyone's coming up and everyone's going to be facing some payment shock. Everyone's coming off 1.74% 5-year fixed rates, and they're going to be going into 5% 5-year fixed rates. So everyone doesn't really know what to do. No one's really doing the math for them. The banks are taking, I don't want to pick on the banks, financial institutions are just taking orders and maybe not doing all the calculations. So you know from just our relationship that I've been singing that don't expect rates to go down too soon song for a long time, while everyone's like, oh, the economy is going to crash. It's not going to do very well. We're going to take a short-term mortgage interest rate and try to see if we can recapture it on the end. But if you actually do the math, and I'm going to take a $300,000 mortgage, and someone who maybe took a 2 or 3 year term back when the spread was a little bit not as good as it is today, but had a 0.75% spread, and they're like, oh, well, we'll just do this for the short term. Well, if you work out the math, that person's never going to recoup the interest that they paid in that shorter term. I just bumped into a client who has coming off a 2-year renewal with one of the big 5 banks that she did 2 years ago at 7.15. She will never recoup that interest. For her to recoup that 7.15 extra amount of interest she paid, which in her case was about $11,000 extra interest, not to mention the $2,000 to $3,000 of principal that she didn't pay. She needs her renewal rate that's coming up in July to be about 3.5. So it wasn't maybe the best strategy. And I was a little bit eerie when people were coming to me. Everyone was like, short term. And I was more like, well, let's take a look at a 5-year fixed. Why don't we, instead of you worrying about being locked in for 5 years or 4 years, take a look at some prepayment privileges. And a lot of financial institutions don't offer prepayment privileges, but a lot of our lenders that only deal in mortgages do. So people could easily look at that 2-year 7.15 big bank rate and be like, no, I'm going to take the 5-year fixed at 5.5 and bump my payments up by $100 or $200 to match that payment. If people actually bumped up their payments, like this one person that I'm thinking of in particular, not only would she have not paid an extra $9,000 to $11,000 of interest, she would have also recaptured that in more principal. So she would have knocked off 2 years off her mortgage amortization and been way further ahead. But I mean, with everyone with their own opinion in the media thinking that the rates are going to crash or rates are going to come down, I remember when they went up so sharply. It was November, and you have to understand that me and my team are used to submitting 10, 11, 12 files a week. It just stopped. It was like October 31st. It just stopped. And the following November, we didn't even submit our first deal till November the 17th. It was unbelievable. In my 12 years in the broker side, I've never experienced a 3-week window where I didn't even have an application to submit. Nobody was asking me questions. Everyone was just like, what the heck happened? Interest rates went up like so fast, so much that we were all just stunned. And then we all started singing the rates, the economy's going to crash song, and it just didn't happen. And it's persistent. Inflation's still there. Jobs are great. It's a U.S. election year. Everyone's laser focused on anything economy this year. And I know we're filming this before the Bank of Canada announcement, and you'll probably air it after. But I'll see if I'm right. But I don't know if the Bank of Canada is going to lower this June or not. Like, I feel like they're not.
And you're kind of thinking there is that it'll stay kind of steady par
I think they're
course,
going to hold
maybe.
again, to be
Yeah.
honest.
Hmm.
And I mean, the way things are going, like I don't think a lot of people realize that our fixed rate mortgages are really tied to the Canadian bond yields, which is really directly tied to US Treasuries. And
Interesting.
US Treasuries are doing very strong. Our bond yields are persistently, stubbornly high. They actually went up from 3.68 to 3.8. So if
Okay.
for like a little like rule of thumb for anyone who's watching is that if you
Yeah.
look at the 5-year Canada bond yield at 3.8, you can really add about 1.5% to 2%, and that's pretty much where your 5-year fixed rates are going to be. So
Interesting.
it's kind of interesting that in 28 years I've never really seen an environment like this. I mean, I remember 2010 when after the global financial collapse, we still didn't really have any effects here in Canada so much, but slowly our rates went down. And that's what I'm kind of hoping is going to happen over the next 12 to 18 months is we're going to see just a little bit of a settling of rates into the 4.5, 4.25 range. And a lot of young people like yourself don't remember what it was like. Like I bought my first house in 1997, and my first rate
Yeah.
at the Big Blue Bank with my dad's private banker who got us the best rate at the time, and it was a smoking hot rate, was 7.4. That was my very
Right.
first mortgage rate. Yeah.
Yeah.
1997. I'll remember it for a long time. So
Yeah.
everyone who thinks the rates are high, no, this is normal. When I worked 14 years at one of the institutions, rates were always in the 4 to 6% range. So this is normal, and my thoughts are to expect it to stay. I don't think we're going to get into those 3s or 2s again unless something really bad happens, because we need something really bad happen to have awesome mortgage rates.
Right. Interesting.
Yeah.
Huh. And yeah, you're right. I mean, historically, we are coming out of like one of the lowest times ever. I remember hearing stories as well from my parents speak about their first mortgage and what rates did get up to, and it was more like the range of 12 to 18% at the time.
Oh,
And it was more
100%.
like,
I remember growing up as a
yeah,
kid, like in grade 1, grade 2, my parents had their mortgage paid off already. Like they had saved 50% down and were rapid payers. But I remember some of our family members were shell shocked at 21%.
yeah, yeah.
Yeah.
And that just seems like so far out of reach. I don't even know how people would react if that
I mean,
happened
just
in
for
that
some
regard.
perspective, like I mean, my parents bought their house for like $11,000, right?
Right.
Yeah.
Yeah.
So I
Yes.
mean,
Yeah.
there's
Yeah.
a little
Good point.
perspective, but I mean, there is an economy of scale too.
Yep.
But just to keep it in there. So I always feel that when you're going to ask questions about your mortgage, like the most common question I get is, what is your best rate? And that's not the exact right question to ask. And like, don't get me wrong, rate is important. I mean, a small variation can mean thousands of dollars, but also paying those few thousand of dollars for a better product could save you tens of $1,000s should you need to make changes. You can probably Google mortgage penalties and go see what some of the astronomical mortgage penalties were. I remember in 2010, when I was still working at the bank, rates were coming down. Everybody was like, oh, I want to get that 3.5. I want to get that 3.25. But their penalties were $20,000, $30,000, $40,000. And I mean, you have to really ask yourself, was saving that 0.05% on your interest rate worth it on the other side? Because now something unexpected happens, you need to sell, and you're facing a $10,000, $15,000, $20,000 penalty. It's really important. And one thing that I've really learned over the years was to you don't want to slam your competition. I mean, everyone's trying to do their best for everything, But I mean, for you as the consumer and you're researching things online, you really want to see who's working for your best interest in the end. Like what's your prepayment privilege? How much can you do in your prepayment privileges? Can you do it online? Do you have to go see your branch? Do you have to make an appointment? Will anyone tell you, hey, you can pay a $4,500 penalty today that's going to save you $20,000 over a new 5-year term? Are your bankers doing that for you? And I feel like that's one of the biggest services we provide, is just to be able to look after somebody in the correct way and make sure that they have good advice, make sure their circumstances haven't changed. We follow up with our clients on every mortgage anniversary. We want to make sure that there's not anything that really bad happened in their life where they maybe need to refinance, take out equity, maybe they're moving. We want to make sure they're well positioned. And I think somebody who comes to see a mortgage broker who asks all the right questions up front is going to be way better off than going to the financial institution. And not to knock the person or the banker at the financial institution, but I can almost guarantee you we've had more training and we've probably seen a lot more weird things in mortgages. And I remember doing some deals for the real estate office you worked at. Like, there was some weird things we always came across together, and you need someone to be able to navigate through that.
100%. And I was just thinking about how to say this, and we'll keep it as positive as we can. I'm always about keeping things positive in terms of how I'm going to talk about maybe a little bit of like the financial institutions in my experience. But I find that there is, just by nature of the growth of some of those companies, I have a pretty steady, for a long time, I actually had a really great person I would rank very highly in my mind in terms of like a great bank experience, and they're there for like a decade plus. But for the last number of years, I've noticed, and I know I've mentioned with others too, it seems to be there's a bit of a rotation on staffing at those places. And when you mentioned that you have 28 years of experience and in different numbers you mentioned there, I see so much value in what you would bring in as what I would consider like as I mentioned before, but like a specialist within that industry, specific for such a big purchase to be made, versus someone with like less than 2 years. There's perhaps nothing wrong with taking advice there either. As I said, I'm dancing on the tightrope of where I'm going with this, but I've experienced that personally, and it is kind of annoying and hard to go back when you kind of know the processes in place almost better than they do, because you've been doing more borrowing and stuff in that topic. And it's becoming a very expensive decision. As I mentioned, a friend of mine who did reach out to someone in your space, I think he tabulated that he saved 60 grand is a big number, for very likely if they stay at that rate and stuff for him, in his case. And it might not, be a big deal to some institutions, but I mean, for his family individually over the next decade, 5 years of borrowing for that mortgage, it's going to be quite impactful. So I think there's tons of advantages to getting help, and like you said, asking the right questions about that and having flexibilities to prepay. I happen to, on the positive end, have very good ways to do that. I can automatically do it through the app that I have and stuff. So there's lots of positives through what has been curated there. But in terms of like going back to a familiar face, often it's getting kind of tricky. And I'm sure I'm not alone when I say that, though. That's kind of why I wanted to dance on that path. It's just that second opinion could be very valuable. And for someone to get into the space, if they haven't used someone like yourself, in there, I think that's just like a big testament to you staying in, so committed to one, specific area in there. You become an expert just by number of reps of doing it, like you said, in the real estate space. Like you're like the marathon runner of mortgages. So yeah. Anyways, that's just my take on what I've recently kind of heard, like I said. But what in terms of like the value, and we're talking about more the Manitoba local market here, I would assume, unless I'm wrong, we're reaching further out than that, but I believe it is the Manitoba market, most of the business for you guys there. Is what is like what are the numbers looking like for for like average payment that folks are making? And just to put that in perspective, if they do stay the same, or when people come up to renew, what that's going to mean for that gap from like that 2% rate up to maybe a 5%.
Okay, so in like back in the good days, you were looking on a $300,000 mortgage around $1,500 a month, $1,600 a month payment, and now you're going to be looking around $2,000 a month. So it's not nothing.
Okay.
But I mean,
Yep.
you have to keep in mind after 2016, we were stress testing. So we've stress tested everyone who's renewing for these rates. Yeah, you're not going to like paying maybe the extra $500, but we've probably already accounted for the extra. And one nice thing that happened this year was that if you do want to transfer your mortgage from one lender to another lender for a better rate, you don't have to re-stress test anymore. They will take the contract rate and approve you at that rate. And for a lot of people coming out of the pandemic, like credit cards were used maybe a little more than anybody wanted. Savings may have been depleted a little bit. Like, don't be afraid to refinance your mortgage. Get everything into one payment.
Right.
It was like such a unique period of time that we've never experienced before, that just make sure going forward you can have a plan. But if you have $10, $20, $30,000 of 19, 20, 24, 28% interest rate on credit cards, consolidate that stuff. It's okay. Like, I think that's a big message. Like, people really punish themselves internally for maybe not being as good with their money as they should have been, or as good as they used to be with it. But it's okay. Like, just get back on track, do the refinance, and you're going to be fine. And that's going to just lead me into my next problem. My next thing that I really feel is a big opportunity for people is if you're experiencing financial hardship where you've went through a bankruptcy or a consumer proposal but have equity in your house, a lot of trustees who work in that space, I find, either don't structure the proposal or bankruptcy correctly. And I'm not sure really why that happens, but we do see it a lot on our side. But you are able, if you have the equity in your house, to take it out, pay off your proposal or bankruptcy. It will be at an alternative lender. There will be a small lending fee. The interest rate will be higher, but you'll get rid of that right away. And you can get a new piece of credit and start reestablishing your credit right away. And within 2 short years, you'll be fixed, you'll be healed. And that's one segment where people don't really realize that, oh, I have to sell my house. Oh, I have to do this. Oh, I can't go out anymore. I have to give up my hobbies, but you don't. And you don't have to punish yourself as a person. There are solutions if you have equity in your property, definitely.
I actually brought up a really good point. It's something that I haven't wandered down a path of, but I think it is, like, life happens, we'll call it. Things happen, and someone can reach out to you. And in terms of like consolidating some of that debt, is that something that you guys offer services, or are you're part of the conversation? And if it involves the core of the mortgage, you can help there, or do you guys help with different aspects of that as well?
You have to be licensed to be a trustee or help people with debt consolidation, which we do not do, but we can consolidate everything in the scope of your mortgage.
Right.
And I think what a lot of people don't really understand is that even when you're refinancing and you're a little short, and maybe you have a couple of collections, that those collections companies have bought that debt from the bank, from the hydro, from the utility, from the credit card company, right? They bought it all, and they're already expecting cents on the dollar. So if we don't quite have enough equity, you as the consumer can call the collections agency and maybe negotiate with a good mortgage approval on your side. And a lot of people don't even really know that. And I think it's really important to mention, because I just know there's a lot of people out there struggling and don't know their options. And I really want to stress that, not to be embarrassed, because it's happened to everybody. It's happened to me, like way back in 2006. I had to refinance my whole house. I was like, I was a big talker, Johnny Walker. I had a nice, big, fancy car. I was going on trips. I was spending money like it was going out of style, and I got learned good. So I think the important thing is to really remember is just don't be embarrassed. Seek some advice. We'll tell you, like, if we think you should sell your house, we will say we think you should sell your house. If there is a path for you to heal financially, we will take you down that path.
That's awesome. That's really cool advice. I've never really talked about this topic ever. That's interesting to hear too, that it, not to make it sound such as easy, because a lot of that is just like more of a personal hit on, the conversation around egos and how we always want to try, maybe not admit to a fault that things have gone wrong or that we've fallen off of the planned path. Well, I like to say that we're good with our money, but we all have things that happen, like you said too, or, want to go on a trip or a few weddings in a year, things do happen. And between that and potential burdens that happen over the last few years, you could definitely see how that could happen a lot easier. And maybe other folks are in there. So if anyone is listening to this, definitely, I would say, instantly reach out. We'll get to the all the contact stuff near the end of the episode. We'll have that posted here too. But you make it sound a little bit easier than I would have anticipated that to be. And if you do get it consolidated, and
it's a lot easier than everyone thinks. But I mean, while we can't always maybe do it right away, like, we can at least put you on the right path. And I want to actually spend a little bit more time on the real estate side, because that's, I know where you came from a little bit. And I want to really stress the importance of pre-approvals.
Yes.
Because a pre-approval is not what it used to be. So if you're a young person like yourself, talking to an old person like me, when I got pre-approved back in 1997, I was pre-approved. Like, it didn't matter what I bought,
right,
where my down payment was coming from. It didn't matter. Nothing mattered. It just, you're pre-approved. That's not the case today. You're pre-approved today, subject to you not screwing up your credit score, you not changing jobs, you not spending your money, your down payment meeting the standard under anti-money laundering regulations. It's ridiculously tough. And it is easy to mess up your pre-approval. So for those first-time home buyers, second-time home buyers, if you're buying a home and you're getting a pre-approval, the first thing I really want to stress is your down payment. Long are gone are the days where you get your bank statement and it was 1 page or 2 pages and you never touched your money. You weren't Venmoing it over here and transferring it over there. And it's so important that you keep what we say as a clean down payment without having large transfers going into your down payment account. And we need a 90-day history, especially if you're putting down less than 20%. And what a lender is going to do is they're going to take 3 months of bank statements, and they have to go through it line by line. Any deposit over $3,000, typically, some are $2,500, but $3,000 needs to be sourced. So if it's not your pay, if it's not CRA tax refund, if it's some weird e-transfer from Joe, we got problems where that money, now not just that $3,000 transfer, but your whole down payment might become into question, and the lender could pass on your mortgage.
Interesting.
That's how strict it is.
Huh.
And this year we have the first-time home buyer savings account, which are excellent. If you can do it, please put your $8,000 in, and if you can buy back last year, please buy it back. But do it after you've bought your house, and do it after your mortgage is approved, and make sure you have a little bit of room. I can't believe how much trouble those have caused us, because people are moving their money from different accounts to make their $8,000 contribution, and then the institution offering the first-time home buyer savings account doesn't have good reporting because maybe it's too new, and it's been causing a little bit of a hiccup. So for anyone buying a home, please keep your down payment in one account for 90 days until after you've purchased your house and we've satisfied your financing condition. Please.
Very interesting. No, I think that's great advice, Peter. That's and it's been a number of years since like it's been just over 10, maybe it's 11 years now I've been in my place, and that was in 2013, but I remember at the time there it did seem like a bit of like quite a few rules around that, but also it didn't it feels like it's changed since then, even from what you're saying, and I don't know that to be true. I just don't remember there being that many rules around that, but maybe I wasn't also that active. Like I was still in university, but I just had been working up and saving a lot at the time. So I had put down 20 or 25% at that. Like it was a good chunk of money
It
on
didn't
the
matter
property,
where it
right?
really came from, as long as you had it. Now it
Mhm.
matters where it's been for at least 90 days. So I'll give you a good example. We
Yeah.
last year we had a couple new to Canada. Parents were gifting money from overseas.
Hmm.
The wire payment came in. It went through all the scrutiny. Got the wire. It was a few wire payments of about $50,000. We saved all the receipts. It went through the AML process. Everything was good. So this young couple had about $250,000 approximately, and they went and opened up 5 accounts each, so 10 accounts.
Okay.
Okay, Canadian checking, Canadian savings, US checking, first-time homebuyer savings account, and RSP. Oh, and TFSA. Sorry, there's 12 accounts.
Okay,
And
because they duplicated them. They went like
yeah,
what?
one for
Yeah. Okay,
her
6 and 6,
and
and
for him, right? And
okay.
then they moved all this money around.
Yeah.
5,000 here, 10,000 here. It was all over. When I didn't even know what to do, there was so much paper, and I needed 3 months history for all those accounts. There was 79 transfers in 90 days between 12 accounts.
Oh.
So also, please don't do that. Whoever's watching. Yeah, it took me 4 hours just to sort out the down payment. And I mean, fortunately, it was all that same money. Like there was nothing else
Addition.
that was
Yeah.
wired or transferred, or no unusual
Right.
deposits. But one $3,000 deposit in one
Throws
account
up a flag. Yeah.
could drop a huge flag where you might not qualify for your house anymore for another 90 days. Like it could knock you out of
Oh
the
my
market.
gosh.
So it's kind of
Wild.
interesting in
Yeah.
how
No kidding.
careful we need to be, and and like between me, you, and whoever's watching, like most people don't really understand how much work goes into it on our side just to make sure we can meet all the standards.
Yeah, that seems like a lot more
Yeah,
regulation, although it's like great to know, and yeah, listener, please follow that process if you are getting a house and this is still relevant
yeah, just
information if
keep
you
it
listen to it later
simple,
on.
keep it clean, don't make any changes.
Yeah,
Take
because I've heard
cash.
the part about
Yeah.
the job change thing within that time period too, and I guess that has to do. Is that more related to like probation periods within companies, or normally like
It used to be a
90
real
days?
challenge for us, but like we've been fighting back as an industry against that, because I don't think
Yeah.
anyone should be punished for changing or taking an opportunity to better their life. And
Right.
there's been some really good changes around that. So as long as you're kind of within the same kind of industry, or you've been sort of building for your next job, the
Right.
probationary period doesn't matter. I
Okay.
mean, it used to be a real challenge for some people of Winnipeg Police Service because they have a 2-year probation, and there were some
Right.
stickler lenders that just would not even consider that
Right.
until that 2-year probation was up, and that's just not correct. And we've remedied that as an industry, and we're hoping to make some more big changes, but that was one of them. Probation isn't too big of a deal. Don't quit your job, but if
Right.
there's a better opportunity in the same field, by all means, always talk to your professional first, but it should not be a problem. Shouldn't be a
Well, that's
problem.
what I was kind of thinking too as
Yeah.
we're saying that, but I know like it probably was a historical thing, kind of like a older rule that followed through. But I mean, between different, I have personally been affected by like different mergers and acquisitions, and then the next role that you end up taking on, planned or not, in that scenario, has ended up being
100%.
a better role or better financially like gain there. And it would be hard to say in that circumstance that that was a negative for that that side of the lending experience. But then once you're in the mortgage itself and you do make a change, like you were saying, it's kind of a null and void, like not really an issue anymore. But once you're in there and you do have those changes, there's no extra questions as that's going on. So as long as you get through that period of time, you're kind of steering clear, like you're good that way. It's just prior to, they're trying to make sure that there's nothing suspicious as far as activities or big changes that are happening.
They're just trying to meet their insurance requirement standards and their audit standards. Like that's all we're trying to do at the beginning, is just try to do that. And it's a lot. Like we figured it out. There's like about 57 things we do on a mortgage that people don't really see. Like the days of me being, Steve Maxted at 123 Any Street. Here's your pay stub. Here's your mortgage, sir. Those days are long gone. Like there is so much we have to do and make sure and educate and understand what your needs are, understand what you think your next 3 to 5 years are going to look like. Like it makes all the difference. If someone's just filling the order, I don't think they're doing the borrower a service. Like I truly believe that.
Right. What are some things that you would definitely make sure that you have on your mortgage if you're giving advice to someone today?
Well, everything's a little bit different, right? So my first house that I bought in 1997, I lived there for 14 years. Yeah. Okay, so if you are first-time home buyers and you know you're buying your 10 to 15-year house and you don't really have any plans of leaving, or you kind of know when you're a lifer, like, when you're a lifer, you know it. And then I'd say really try to get the best rate. Don't worry about too many privileges. If you know this is your 15-year house, right? Like just try to go for your best rate. But like maybe you're a go-getter up in some company and you're going to be transferring to head office and it's in Toronto or Vancouver, where you may or may not be able to afford anything. You don't know. Maybe want some flexibility and a low penalty of variable,
right?
Something that has open or shorter term. Like that might be something that's really important to you. Or you could be someone who is going to be the next Mr. Monopoly and you want to start building your real estate empire, and you're starting with this first house. You want to live in it for a year or so, but then you want to convert it to a rental and keep building. And I mean, your goal is so important. Are you going to have kids? Do you have kids, and are they going to be leaving? Do you have kids, and will they be staying?
Right.
I mean, I think some of my cousins stayed at home well into their late 30s. Like, I don't know. It's just one of those things that everyone's situation's unique, and not one mortgage is going to fit the bill for everybody. And I mean, maybe you're expecting some money to come in from a pre-inheritance, and I mean, it's really, you want to put a good chunk against that your mortgage. You need to have the ability to do that. There's no point getting the best rate mortgage to find out you can put 10% down on the anniversary only, and sorry if you missed it, and then you can't do it next year, right? Like, I mean, you really want to make sure that the mortgage that you have is going to really fulfill what you want. Because, I mean, one bad decision can cost you a lot of money or prevent you from achieving certain goals, right? And I think that's one of the biggest, most important things. And when you go to see your banker, and no disrespect to your banker, but they have one set of policies, one set of products, and it may not have the flexibility you need. I have 30 lenders that I use all the time, and it's hard to keep all their policies straight, but we do somehow, and we can help fit something that's more tailored to you. We had a client this year, declined by bank 1, declined by bank 2, declined by credit union 1, declined by credit union 2, and declined by a mortgage broker from another province, actually. And I went in through the file. We just fixed one or two things up on their credit bureau that we had the ability to do. Bing, bang, boom, we had the deal approved. And they're in a bad spot. They released their financing condition. Their $10,000 deposit was on the line. They needed an approval. And just so that was what? 1, 2, 3, 4, 5, 6 people that missed this thing that could easily be fixed on the credit bureau by filling in one form. And 24 hours later, at the little cost of $17 for the investigation at Equifax, we fixed it. And we got them, they took possession already. Like it's amazing what can be done if people like know what they're doing or are well trained, really. Like it's all about training. I mean, I've been doing this 28 years and I learn something every day. Like I try to learn something every day. Everything changes.
Yeah. No kidding. No, I think that's just so fantastic to know. And I really hope that folks do, consider this, especially as we're coming. There's lots of noise out there. I spend a fair bit of time on the social media side, but I think, having the conversation with yourself and or within the team could put a lot of people's minds at ease ultimately. It's one thing to see stuff online, but instead of, worrying about that, I think coming in and having the conversation with yourself and like I said, looking at these different options, as you were saying, is just such a high benefit for them. Hopefully not only financially, but also like peace of mind. Maybe they are getting the best situation where they already are too. But it's great to have that kind of audit done, so to say, for them and have that conversation. So, and like you said, you never know where their life might
just don't know.
So, because it could change as much as you have the plan.
50 to 60% of mortgages aren't going to make it to the end of the term. And I mean, you'll hear there's no real stat that anyone's really produced on this, but let's let common sense dictate this, that 50% of the people are getting divorced.
Right.
Probably a certain percentage in there are getting transferred out of province, and say a certain percentage are going to pass away. Like there is so much that can happen in your life that you just won't know. But I mean, you need to have something that is going to be able to not cost you a bundle if you need to make changes. Right. And speaking of passing away, I just wanted to like maybe touch briefly on insurance. Life insurance, disability insurance are probably the two big reasons why mortgages get foreclosed on. It's lack of insurance, addiction, and disability. Those are like some of the three big things why mortgages get foreclosed on.
Interesting.
And one of the things I want to just maybe brag about in the mortgage broker channel is we have a product that we get through Manulife. It's called Mortgage Protection Plan. And I know it. I've heard it a million times. Mortgage, life, and disability insurance aren't good. Blah blah blah. I have insurance through work. I've heard it all. But here's the Coles Notes version of why I think it's really important. If you take it from your financial institution and you keep your mortgage for 5, 10, 15 years, you're limited, especially if you run into an illness that isn't covered, someone passes away, or you become disabled. You are not going to be insurable anymore, meaning you probably won't be able to shop your mortgage around anymore. Manulife came out with this product that's totally portable from property to property. You can top it up if you move up the property ladder, and you can lower the coverage as if you downsize. And it's really important. And we always try to position it even just as gap insurance. I mean, when you're your age, Steve, like it's cheap, and to not take it's like ridiculous. When you're my age, like pushing 50, it's expensive. But I mean, I want to share a story because the surviving spouse said it was okay that I could share this story. Last March in 2023, I had a couple. They had a beautiful new home. Their mortgage was funding on March the 6th. I offered the insurance. They declined it because they didn't think they'd be approved, and it was very expensive. They were older than 50. And I positioned it as gap insurance as I usually do. And they said, please take it for now, and we'll see if we can find you a better option or something more affordable, just so you have something, right? Because they're both self-employed. Well, that mortgage funded on March the 6th, and the gentleman passed away on March the 8th. It was 2 days. And it was really hard for me even to talk about it now. Like, I get a little upset because maybe I should have been more forceful on it, especially because there's a free look period and a refundable period. But I mean, it's really important. You don't know when life is going to throw you a curveball like that. So it's really important. And don't rely on your work insurance, because you're only insured while you're employed.
Right.
If you're terminated or let go, you're not insured anymore. And getting proper private life insurance is also important. But when, from a mortgage perspective, taking that credit protection could really make a huge difference in someone's life, even if you replace it. Like, we don't really make very much money off it or whatever. And it's just really important, because 6 times now in my career, in 28 years, I had someone not live in the house, really. Let's say it that way. And I just really think it's very important. And everybody sort of has this complex where you're going to live forever. You don't have to worry about anything. But it's just not true. And you don't want to be the surviving spouse with 3 kids, the dog, and finding like you have to sell your house. You just don't want to be that person.
No.
So make sure everyone watching this, you have proper credit protection and or life insurance. There.
No, I think that is a great story, and thank you for sharing. That's definitely not the news that anyone wants to get, but unfortunately it's a harsh reality of life that I don't think that we do lean into discussing enough. Life is fragile.
It's really important, I think.
Yeah, and you want to make sure that you do have your the coverage on there. So chat with you guys about that too. Not to make it sales thing, but it's definitely important. It's something that I've definitely had adequate coverage. Someone friend, I guess, got me into that early on for having coverage for life insurance. I mean, knock on wood, we had not used it to this date, but it always was really good, and get it earlier on, like you mentioned too. There are advantages to that, but just making sure that you have the discussion around what kind of coverage you think you may need. Ultimately, better to have some than none.
100%.
If anything, to be said about that. So, I think that's awesome. Well, I'm thrilled to have you on here, Peter. What's the best way for folks to get a hold of you guys and continue this discussion? We'll say from what we chatted about today.
You just Google Peter Paley. I'm sure I'm going to come up, but you can call or text us on our office number at 431-482-2187. You can visit our website at mainstreammortgages.ca, or you can send us an email at greatrates@mainstreammortgages.com.
Awesome. And we will include those in this write-up. If you've got this far into the episode, those will be included on the bottom here. So I would definitely encourage folks to do that, especially ahead of time, before the next couple of years. Or from what I heard you say here today too, I think you're on board for that conversation, very much so, and to encourage folks to do so ahead of that, and to get a good angle on what they might be looking at for increase, or just a better option, perhaps second opinion at the very least. So it's been awesome to have you on here today, Peter. And
Thanks.
Appreciate you making time. I'm excited to chat again.
As we record more episodes. I'm totally fine.
I would enjoy that so much. We got to keep the variety in the mix, but it's seriously awesome having you on here. Thanks for making time today.
Yeah, thanks so much.
Okay, awesome. Chat soon.